Assalamualaikum and good day everyone. For today's presentation, our Group 5, will be presenting a topic entitled Analysis of a Corporate Financial Performance, a trend and comparative study of INARI AMERTRON BERHAD and VITROX Corporation BERHAD. This study focuses on the financial ratio analysis of a two companies operating in the semiconductor industry over a 5-year period, from 2020 to 2024. The analysis includes both the trend analysis and comparative evaluation of the company performance based on four main categories of the financial ratio. Our group member are myself, Muhammad Shakir bin Shafi'i, Nur Farehan binti Abdul Basir, Sili Ainuriska binti Ahmad, and Nur Aini binti Nurizan. For the liquidity ratio, INARI AMERTRON BERHAD demonstrates strong liquidity performance over the 5-year period from 2020 to 2024. The current ratio increased from 4.0 times in 2020 to 7.9 times in 2024, reflecting that the company had a sufficient current asset to cover its short-term liability. The quick ratio also steadily rose from 3.4 to 7.3 times, indicating that the company could meet immediate obligation without relying on inventory. In addition, net working capital grew significantly from RM 730.76 million to 2.4 billion, showing healthy cash flow and a short-term financial strength. Overall, this trend reflects INARI excellent liquidity positioning and strongly financial management in handling short-term commitment. For the activity ratio, INARI AMERTRON BERHAD show a moderate improvement in operational efficiency over the 5-year period. The average collection period (ACP) decreased from 62.3 days in 2020 to 46.2 days in 2024, indicating faster collection of receivables and better cash flow management. This reflects effective credit policy and strong control over account receivable. However, the total asset turnover (TATO) show a decline trend from 0.78 times in 2021 to just 0.42 times in 2024. This suggests a decreasing efficiency in utilizing total asset to generate revenue. Overall, will the collection efficiency is improving, the company need to enhance asset utilizing to sustain long-term growth.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Farehan and I will be present profitability ratio for INARI AMERTRON BERHAD. Okay, as you can see, INARI AMERTRON BERHAD demonstrate consistent performance, but there is a downward trend in recent years. The gross profit margin (GPM) increased from 20.4% in 2020 to a peak of 30.4% in 2022, before declining to 21.9% in 2024. This decline may be due to rising production costs or reduced operational efficiency. Similarly, the net profit margin rose from 14.8% in 2020 to 25.3% in 2022, and then fell to 20.3% in 2024. The next slide is leverage ratio for INARI AMERTRON BERHAD in 5 years. Over the 5-year period from 2020 to 2024, INARI AMERTRON BERHAD has demonstrated stable and moderate leverage levels. The debt ratio ranged between 12.27% and 24.57%, with the highest recorded in 2021 and the lowest in 2023. In 2024, the ratio slightly increased to 21.39%, indicating a rise in liabilities relative to total assets. Similarly, the debt-to-equity ratio followed a comparable trend, increasing from 27.99% in 2023 to 27.21% in 2024.
For this slide, I will continue to explain about liquidity ratio. The current ratio shows a strong improvement over the year, increasing from 3.8 times in 2020 to 6.8 times in 2024, indicating the company has strengthened its ability to cover their short-term liabilities using its current assets. Similarly, the quick ratio has grown from 2.9 times in 2020 to 3.9 times in 2024, suggesting an increase in the company's more liquid assets like cash and receivable. Finally, net working capital showed a consistent rise, reaching Rn 674.93 million in 2024. This upward trend signals robust short-term financial health and growing liquidity. Overall, VITROX maintained good liquidity, indicating effective management of cash flow and current assets. Next, we look into the activity ratio, which tells us how efficiently VITROX is using their assets. First, the average collection period, ACP, has improved from 135.77 days in 2020 to 119.87 days in 2024. This shows that VITROX is now collecting payments from customers more quickly, which improves the cash flow. Meanwhile, the total asset turnover (TATO) ratio fluctuates slightly, with a recent value of 0.46 times in 2024. This indicates that every RM1 in total asset, the company generates Rm 0.46 in sales, which may suggest room for improved asset utilization. As conclusion, VITROX needs to improve its receivable collection and asset utilization to enhance its operational performance.
Financial ratio, profitable ratio for VITROX. Over the 5 years period from 2020 to 2024, VITROX Corporation Berhad demonstrated a strong and a stable gross profit margin performance. The GPM remained high, range between 61.6% and 62.6%, reflecting efficient production cost management and strong product pricing. However, the net profit margin showed a declining trend, dropping from 26.7% in 2022 to 16.2% in 2024. This decline may be due to the increased operation expenses or a reduction in net income after tax. While the company maintains a solid gross margin, the downward movement in net margin signals the need for better cost control to sustain long-term profitability. Net leverage ratio for VITROX Corporation Berhad has shown a consistent decline in leverage over the 5 years period from 2020 to 2024. The debt ratio decreased from 25.13% in 2020 to 15.51% in 2024, indication a reduced reliance of liability to finance its assets. Similarly, the debt to equity ratio dropped significantly from 33.56% in 2020 to 18.35% in 2024, reflecting a lower debt burden relative to equity. This continued decline demonstrates a prudent financial strategy and focus on internal financial. Overall, VITROX maintains a healthy and stable leverage position, which gives confidence in the company's ability to manage long-term financial risk effectively.
Based on our analysis, the overall liquidity performance of INARI AMERTRON Berhad is stronger compared to VITROX Corporation Berhad over the 5-year period from 2020 to 2024. INARI current ratio increased from 4.0 times in 2020 to 7.9 times in 2024. Whereas VITROX recorded a lower growth from 3.8 times to 5.6 times during the same period. Similarly, INARI quick ratio rose from 3.4 times to 7.3 times, outperforming VITROX range of 2.9 times to 3.9 times. This indicates that INARI has a stronger ability to meet short-term availability without relying on inventory. In addition, INARI net working capital is sustainability high that VITROX, demonstrating a stronger liquidity position and more stable cash flow. Overall, INARI AMERTRON BERHAD is in a more favorable financial position in terms of short-term solvency and effective current asset management compared to the VITROX Corporation BERHAD.
In terms of activity ratios, INARI AMERTRON BERHAD shows better efficiency in managing receivables compared to VITROX Corporation BERHAD over the 2020 to 2024 periods. INARI average collection period improved significantly, dropping from 62.3 days to 46.2 days, showing faster customer payments and stronger cash flow. In contrast, VITROX SCP increased from 135 to 151 days, suggesting weaker collection and potential liquidity issues. For total assets turnover, both companies declined in efficiency, but in 2024, VITROX recorded 0.46 times, slightly higher than INARI 0.42 times. Though INARI led in earlier years with 0.78 times in 2021, the gap has narrowed. In summary, INARI managed receivables more efficiently while both companies need to improve asset utilization to drive better sales performance.
Last but not least, we have the profitability ratio comparison between VITROX and INARI. We evaluate two main metrics, which is gross profit margin (GPM) and net profit margin (NPM). For VITROX, the GPM remains consistently high at 62 to 63% over the years, which outperformed INARI significantly, whose GPM has dropped to 22% in 2024. In terms of net profit margin, VITROX recorded 60% in 2024, showing a decline from 22% in 2020. In contrast, INARI's NPM improved to 26% in 2024, overtaking VITROX for the first time in this period. This suggests that while VITROX maintained excellent production efficiency, INARI is improving in overall profitability after tax and expenses.
In terms of the debt ratio, VITROX Corporation BERHAD consistently show a stronger performance than INARI AMERTRON BERHAD from 2020 to 2024. VITROX debt ratio steadily declined from 25.13% to 15.15%, indicating strong control over its liability relative to total assets. In contrast, INARI debt ratio has been more volatile, although it dropped significantly to 12.27% in 2023. It rose again to 21.39% in 2024, suggesting less stability in managing its financial obligations. Now, looking at the debt to equity ratio, VITROX again performed better, reporting a lower ratio of 18.35% in 2024 compared to INARI 27.31%. Still, it worth noting that INARI has made steady improvement, bringing its ratio down from 32.57% in 2021. Overall, while both companies are working to reduce leverage, VITROX has been more consistent and cautious in managing its capital structure. This points to a stronger financial position for VITROX when it comes to long-term debt management. Lastly, to conclude, both INARI AMERTRON BERHAD and VITROX Corporation BERHAD hold strong position in the semiconductor industry, though they shine in different areas. In terms of liquidity, INARI takes the lead, the higher current and Q ratio, along with significantly greater net working capital. This shows stronger short-term financial stability compared to VITROX. When it comes to operational efficiency, INARI has a lower average collection period, meaning it converts receivables into cash faster. Still, VITROX edged slightly ahead in total asset turnover, reflecting more efficient use of its asset. For profitability, VITROX stands out with a higher gross profit margin, indicating better cost control. Meanwhile, INARI showed stronger consistency in the net profit margin over the past year, highlighting stable operational management. In terms of leverage, VITROX maintained lower and more stable debt levels, suggesting a more cautious and balanced financial approach. INARI, however, has seen a noticeable increase in its debt ratio recently. Overall, INARI excels in liquidity and net profitable, while VITROX leads in cost efficiency and financial stability. Both companies remain strong and competitive players in the semiconductor sector.